We used to say that sub 100 million, I don't know how you operate a MIC properly. That number's probably drifted up. The biggest opportunity for us is growth. Like as more capital and more interest comes into the space, I think we're very well positioned to manage it. This market is not getting easier. Really great example is compliance. So as we see more and more rules enter our space and more complexity, FinTrack coming in last year, perfect example of it. Groups like ours with, 3 or 4 compliance people on the team are ready to handle it. That's an advantage that if you're a smaller player, you can't economically do that. So I think that's one thing that we see is we'll see more consolidation for that reason. It's Canada. I think our government and regulators like, larger players that are easier to control. Maybe that's getting a bit into my politics. I'm not saying that's a good or bad thing. I think it just is. OSFI, I'm sure, would love to get involved in this space, but it's going to be really, really burdensome for them to manage like 1,000 mix or more. But if there were 20, billion-dollar mix, maybe we see that environment shift a little bit again. So I think we'll be on the right side of that bet for neighborhood.
We're seeing the exact same thing in the brokerage space, right? Like a lot of these smaller brokerages, it just doesn't make sense anymore. If the financial resources aren't there to hire, that's how you live going forward. Like it's not a great model. So a lot of these brokerage owners are just opting out and they're going, I'm just going to go back to brokering. I know I can make a good living there. I don't want or need this stress. You guys are good at it. Take it and let's move forward.
The fund's getting sucked out, right? Like if you're running a $50 million MIC and you're a broker who kind of started this off the side of your desk and over 20 years, you've built up a nice little thing. I mean, 10, 15 years ago, that was a great little business to have. You could chop off half decent dividend stream from that. But now almost all that's going to get eaten up by compliance. Like even for us, we used to say that sub 100 million, I don't know how you operate a MIC properly. That number's probably drifted up because if you just do the easy math, most MICs charge, between 1.5% and 2% on their assets to keep the math easy. Well, that's $1.5 to $2 million a year, unless you're putting a bunch of costs on your investors, which we don't do. But from that, you have to pay marketing, you have to pay underwriters, you have to pay BDMs, you have to pay yourself, you have to pay compliance. Like it's not that deep of a capital pool. So whereas for a group like us, we can absorb and we'd be happy to take on that $1.5 to $2 million in revenue because we can do it at no added marginal cost. I think that's what we're going to maybe see more of, or maybe these groups just fade. Maybe some of them just get stuck. Like I've talked to groups years ago who like, no, this is what we want to get paid. I said, your business isn't worth that, but no problem. I'm not going to argue with you over what your business is worth. There's no point in that. And we're kind of seeing some of them circle back. They're a little bit smaller. They've shed some assets. They're a bit more stressed. Like, oh, these things are hard. I got an email from FinTrack that I got to respond to. I actually haven't implemented my PPM, forgot about it or whatever. It's tough.